Welcome to this webinar about improving budgeting and planning for 2020. My name is Morath, and I'll be starting this presentation. While you're listening to this presentation, you may at any time pose questions using the question function in your GoToMeeting control panel. So that's always possible throughout the meeting. And we'll take the questions at the end of the meeting, or if something important comes up, I'll also have some colleagues that will look at the questions during the meeting and may intervene with them if necessary. Okay, so right on the hour, and we'll start the presentation. So what I'll go through today is the will be effective strategies to improve budgeting and planning for 2020 using EFP Financial Planner, but also a little bit in general as well. And I will do also a demonstration of some specific things that I think is important. And after this, if you would like to have more like a demonstration of the product as a full, rather than these specific topics that I'll cover today, please feel free to contact us and we'll arrange that, of course. So I'll go through a little bit about the budgeting and the relation between decision making and budgeting, and budgeting and forecasting, and how they interrelate, which they do more than ever in these volatile times. I'll do a little bit of a demo and conclude with some product information and the Q&A after that. So if we look at the reality of budgeting, is that we all or many organizations spend a ton of effort on doing a budget, which is in many cases used only to a limited extent. And of course, that budget is done. And if you would have done a budget in 2019, you probably for 2020, let's say you're on calendar year for the simplicity. I know that some of you aren't, but let's say you were on calendar year and you made that budget. You probably started out the budget in August. You concluded the budget in November, and then in November, December. And then you went into 2020, and since then things have obviously changed, right? So if you remember the black swans from the 2008 crisis, a lot of people talked about black swans. It turned out that black swans, they weren't really black swans, right? Because they were pretty common with black swans. So in what has happened this year is obviously this instead. So then came this little blob that disturbed the full world at the same time. And this is a little bit of how to handle the volatility of this. I mean, we have a lot of more volatility in the world today. At least we perceive that, or lots of our customers perceive that, compared to 10 years ago, or maybe 10 years is not, maybe let's 20 years ago then, before 2008. If you remember, I mean, when you thought that if it was state debt, it was there was no risk. There was something called risk-free debt by then, and which is there is no more. So if we go into I mean, where does budgeting traditionally go wrong? I mean, there was a lot of that's related to systems, to Excel sheets, and you have a lot of data that is moving around. You have to rekey them into different systems, and typically those systems are Excel sheets. They may be super complex and hard to maintain. And if you're looking at in a more volatile world, of course, then the budget that you made for 2020 is, of course, now maybe much less relevant or not at all relevant compared to compared to your situation today. And even if you do multiple forecasts themselves often in mostly different time, right? I mean, you take, let's say you have a quarterly forecast, and so we have all the figures up until March. We put the actuals until March into our forecast. We take the budget, put it into the rest of the year, and then we modify this to reflect the new situation. However, what you really want to do here is often to be able to support decisions, right? I mean, you want to make your budgeting and forecasting into a decision support system in a way. Because if you have your board in your company or your top management, in the end, you need to make decisions. Should we fire people? Should we take an emergency loan? Should we do this or that, right? And all of these are kind of variants of the forecast. And the ability to handle these variants of the forecast is maybe the gist of what we're talking about here today, and how to do that. Because that is really important to be able to support that process in a volatile world. So Epic Financial Planner, as you may know, I mean, it's a tool that can do the full FP&A scope. So it does reporting, it does budgeting, forecasting, or automates that, and it can also actually do fiscal consolidation as well. A lot of people with multi-company situations use that, but that's a little bit out of the scope of what we're doing today. So what I'll be talking today a lot about is component forecasts, and component forecasts is a little bit like using these Lego blocks you see up here, right? So basically decomposing your budget into multiple Lego blocks that you budget separately, but then you can put them together into different forecast scenarios. And we'll show a little bit how that works, and how that is done in EFP. And we think that this is a really, really powerful tool when you sit and when you're working with your board or with your decision makers, that you can actually take these different Lego blocks and put them together and experiment a bit to see, should we do this initiative, should we do that, and how we'll do that. These are applicable both to budgets and forecasts, of course, but maybe even more to forecasts then, because they are a way of handling the volatility themselves. So, and that's this is a little bit saying the same thing as I just did. So, going forth from that. So typically, I mean, if you think school book, you often did like, best case, worst case scenarios. Those are also very composite, right? I mean, they are very much like the forecast or the budget. So they are kind of full scenarios. You cannot really decompose them into parts, and they are really not decision-making tools in a way, right? Because you can look at your best case and worst case scenario, and you have your middle scenario, and how should you do a decision based on that? You want to do my best case, your best or worst case. I mean, you cannot select that, right? It can only give you, a sensitivity analysis to be able to see whether this is a relevant scenario. So I would say that that's more like a sensitivity analysis than it is a composite, the type of Lego block thinking that we're saying about now. That said, I mean, sensitivity analysis is of course always really interesting in any modeling of business, right? So with that, I will go into a a short demo here and look a little bit at EFP and how it works, and especially highlighting how this works with these different pieces, how you piece them together. So having a look at EFP, I'm not sure how many of you have seen EFP, but I'll just also highlight it a little bit in general. So what we're looking here is the SaaS version of EFP. SaaS version of EFP, you can connect to both Epic or on-prem systems and to Epic or SaaS systems. And that's, for most people, this is the version that makes sense. There's also an on-prem version of EFP, but even if you're on-prem with your Epic or system, it usually makes more sense to have the SaaS version of EFP. And you can see you can have some small graphs here. You can have a bunch of reports, and you have a number of setup items here. Now, right now, I'm an administrator for this in this demonstration. If I instead switch here to be someone else, so I can switch here to be Scott, and look at how does Scott's world look. So then I can actually, as an admin, go in and impersonate him and see that he has some reports he can view. He has some assignments he can view, and all of this is, of course, governed by security, so he sees only what he should see. And if I go into one of the input schedules here, you can see how that works. If Scott is about to do some budgeting, actually I go into the other one, so I'll do the other one instead. So I'll go to division 01 here. He had 2 divisions he should do the budgeting for. And here you can see I have some data here. There's some sales data by account, and of course these doesn't have to be accounts. It could be something else, and it doesn't have to be exactly these months. The columns here, everything is configurable. But in the end, I mean, if Scott wants to do some budgeting here, he can say that, well, my travel training expense here, I think I will have 24,000 in training expense over the year. It will populate the columns like this. But then he knows that, well, you know, June, I thought I would do some training, but actually that got postponed due to COVID for October. So I'll enter some 5,000 in October for my special training. That's 22. Well, that's a little bit too much. I think I can only get my manager to approve 22,000. So I'll change it to 22,000 for the full year, and then it changes proportionally back down. What I can also do is that I can click here and say that I would like to put some detailed data onto this to further explain my training expenses and why they vary over time. I can also go in here and do comments, so to write a comment in here like this, and of course I can just send this for approval if I just mark some figures here, or take the full worksheet and say that I would like to take these figures here and I would like to send them for approval and do apply change here. And when I send them for approval, they are of course not possible for Scott to change anymore. That's why they change in color like this. So so that's a little bit of Scott's world. If you look at the reports in EFP, you can just look. We can just have a quick look at the profit and loss statement, where you see yes, there's a standard column profit and loss statement. Of course, these also vary. Some people would like to have percentage variance, and you know, sometimes you compare to last year, same period previous year, and so forth. But in this case, we look at the full company, all the departments, all the divisions for a certain month here. And let's say I would like to look at the understand where does this other income come from. Then I can just right click on this and say that I would like to show journal details for this. And I would see the journal details that make up these 9,886 here. And if I would like to understand exactly does this come from, what's the underlying booking, then I can see the full journal entry as well here. The other thing I can do here is I can just say that let's say I have my sales here, and I would like to understand how is this split by department, for example, or division. So I click on this, I do drill down by division. I'm not sure whether my sales. So here you can see that how my sales is now split by division like this. And I can then download that to Excel, for example, if I would like to. So that's a little bit of the reporting functionality. And of course, if Scott was only had access to some part here, he would only see that part which he had access to in his report. Going back to being a manager in this case, so I'll go back to being my administrator. Let's have a look again at one of the reports here. So if you look at one of the reports, let's start out with a P&L 12-month report. Like this. So here I have a 12-month report for 2020, and right now I'm looking at my forecast. So, you can see in this report, it is a summary report. If I would like to look at it on a detailed account, I can just click this show details here, and I would get the full report, including all the accounts as well. And the scenario I'm showing is forecast. So if I click on here, you can see that forecast is my current forecast. I can have multiple forecasts if I want to. What we usually recommend is using something called a live forecast, which is that you have a forecast that is rolling in a way forward. You don't have to do a full like rolling 12 forecast to be able to do something like this. You can actually do what we call a live forecast, where you can kind of roll at will. So you can say that you have the same 12-month period for 6 months, but then maybe you extend it with 6 months to be an 18-month or something like that. However, here I can also switch to look at some other scenario, which is COVID sales impact. So this is the forecast. So this is another Lego block here. So here someone did a modeling of what is the COVID sales impact for this company. Well, we think it's like this. It's negative here, right? So it's not negative in sales. It also reduces COGS a bit. And then we also did another thing here, which is modeling an emergency loan, which is then just showing, in this case, we have an interest for that loan. And all of these are different Lego blocks, and those come together in this combined what if scenario. And the what if scenario here is the sum basically of these scenarios. And that means that also when we have automated a cash flow statement, which we look at as well, the cash flow statement would also reflect the sum of these different scenarios. And then you can start doing what really working with these Lego blocks by going to dimensions here and saying that, well, I go into dimensions scenario, and I said that, well, my what if scenario here, I actually don't think that the emergency loan, we don't need that. So I'll just move that out of here. And then I look at, well, what else do I want? I actually think that we are actually better off than we thought. So let's look at, we also modeled another Lego block here, which is acquiring another company to put that into our group. So we'll put the acquisition of X into our what if scenario. Or you could alternatively say that, well, actually it's interesting but I would like to do an acquisition scenario. So I would like to do another one here that's called my alternate acquisition scenario. This, and Actually, it comes up down here. I'll move it up a bit. And let's say that I would like this alternate acquisition scenario is actually my forecast plus my acquisition plus my COVID, say plus let's say that is those two together. So once I've done that, and you can see how easy it is, I just drag and drop these different Lego pieces together. And so once I've done that, I can just go back to my page here and go into my report, which is my 12-month P&L, for example, going back to the same report I was in earlier, and just look at scenario and look at, now I'm going to do report on my alternate acquisition scenario. So and this you can and by doing the appropriate split of your budget here to really support the decision options that you have within your organizations, that your board is presented with, that your senior management is presented with, and doing that, you can get a really powerful decision support tool where you as a controller or a CFO can, in a meeting, just remodel and play around with the different pieces here and look at what are the consequences, what are the what-if scenarios in this, and you can then immediately go into this and look at, okay, so for this, what is the cash flow based on this? Well, that maybe that wasn't the best. Well, I can do that. So you can see what does the cash flow look for February for this, and here you have a cash flow statement that's automated for that. And of course, you can do a 12-month cash flow instead, which would look more like the other one we did. But you can see how this is a kind of a typical indirect cash flow statement, right? You have the net income up here. You have a number of different adjustment items down here. So you have a net increase, decrease in your cash and equivalents here, and then you have the reconciliation here, which is your cash at the end of period and the cash at the beginning of period, which looks at, so you have your cash movement in reality, and you can see how those two reconcile, right? The one coming from the balance sheet income statement, and the one comes from cash itself. And all of this, since you have that automated, it becomes a very fast and effective process to work with that. And of course, you can set up multiple such scenarios. If you would like to add another scenario, like another acquisition here, you could just go into my scenario management and just click plus here and say that I would like to do another second acquisition. So I do an acquisition 2, which is a forecast as well, and do second acquisition. This and then go into and if I've done that, and of course I would need to budget that acquisition as well, but if right now I haven't loaded any data into it, but let's say I would like to do that. I now have my second acquisition here. I can move that into my alternate acquisition scenario if I want to. So you can see how this kind of fits together and how they work interactively together with one another.
Johan, if I may ask a question from an attendee.
Sure.
Is the cash flow method only indirect method? Can we not choose to have the direct method?
Yes, you can choose to have direct method. So it's we actually deliver some templates here for cash flow, both direct and indirect. But yes, you can do direct. You can do, in reality, what you do when you define a cash flow method is that you set up business rules to compute the different lines in the cash flow statement, right? So if I look at here, in my indirect statement, you can see that, for example, net income here is computed as net income before tax. And if you look at something like accrued expenses, is the movement of my expenses and wages summed up together. So this is something that you set up, and it's pretty. So let's say I would like to add another account into my accrued expenses here. I would just add a new step here and say that, yeah, I would like to add my another account here. I would say that I would like to do that. I had some well, maybe that wasn't probably not in equity. So so some let's say I would like to add this account into my accrued expenses. Not that it makes sense, but like this. So then I would add it like this. I would say that this would be I would like to take the movement of that account and add it into my accrued expenses cash flow line. So that's how you work with this, and so you can of course set up that as a direct cash flow instead.
And another question, Jan. Someone said, I've always had trouble tying P&L forecast to cash flow. How does EFP do that?
Well, I mean, so when you have trouble to tie P&L forecast to cash flow, I mean, cash flow is. I mean, if you're looking at an indirect cash flow statement, which tends to be the most common, that's why I demoed that. But the the P&L, I mean, you basically base that off a number of P&L and balance sheet accounts, right? The problem that may occur, that's also solvable, is if you have balance accounts that have both cash and non-cash transactions within them. Because then you need to go back to the individual transactions to figure out whether they are cash or non-cash transactions. But that's also possible to do. So that is also possible to automate. But and it may be on it's usually on that level that where you have to go to. Yeah. Okay. So let's see. And something else that's important yet while I'm in here as well, I'll just show you very briefly how this. So I mentioned security earlier. So what you set up is that you set up basically your organizational tree with your different positions that exist in your tree. So you can see that Scott here is the controller. He reports to Penny, who is the CFO, and then who reports to the CEO, who happens to be the administrator in this case. So you set up these roles, and then for each role you set up what do they have read access to, or what do they have access to in this, and that can actually be automated. So if you have the clean like a division or the department structure, and you just have access to your own department, you would just need to set that here in your department. Then you would have department here, and then you would just set which department is this person heading up, right? Or actually, what you say is that this position is heading up this department, and then you say that currently holding this position is Scott. So let's say that Scott is replaced by Penny. Then I would just switch to Penny here, and then Penny would get all the rights associated with being the controller in this case. So that makes it really easy to set up the correct securities. You don't have to deal with like these roles and groups and things. You just set up your organization as it looks and say who should have access to what. And also what you can do here is that you can, let's say it's summer, someone goes on vacation, you can also do delegations. So you can say that, well, Scott is the controller, but I would actually like to delegate Jan here. So I would like to delegate myself. So I do like this, apply and change. So then that means that now I get delegated, so I can do whatever Scott was able to do earlier. And that means that if I would go into my page here, go and switch to being Jan, then you can see that Scott, who had or actually I got the delegation from maybe I was on Penny, sorry, but you can see that Penny, who was the controller, I got this budget assignment. I got delegated from Penny now, but I'm Jan here in the system. So. This. So I think that's will conclude what I wanted to show you in this demo. I see another question. Yeah.
I believe you showed it, but just to be clear that we cover this question, one of our registrants asked if you could show how individual Lego blocks are built. Could you just very quickly go through that again to make sure we
so I mean, they are defined in the way that I said. I mean, you define them by setting them up as scenarios and in the scenario dimension. But and then once you have defined them like that, you of course also need to define how to get the data into those Lego blocks, right? Or into and that you do by setting up a workflow. So let's say I would like to set up a workflow for my for this new my new acquisition 2, for example. So then I can just take my budget for let's say I take my budget workflow here, and I can duplicate that and say that I would like to create a workflow for acquisition 2 workflow, make that active like this, and then say that is valid for acquisition of so like this, and set the time and so forth. So there is a little bit more to this, and once you set that up, then you can say, okay, so who should contribute in this workflow? So is it Scott that should do something, or who should do the different parts in this workflow? Maybe if it's an acquisition, you need to also to go into your entity management here to set up another entity, and that entity doesn't have to exist in Epicor, right? It can only exist. There could be an entity which you have for an acquisition, which is only exists in Financial Planner for now, because you don't know if the acquisition will happen, right? So it's like a virtual entity you set up. However, if you go further down into that acquisition scenario, you may actually ask that entity to send their trial balance to you in Excel format, and then you can upload that using Excel into Financial Planner to get the pro forma consolidated view of what your group will look like after the acquisition, for example.
Another question that came up, Jan, do any default workflows exist within EFP, or must user create them from scratch?
No, you create the workflows doesn't exist from scratch. They are, however, very easy to create. So the workflows, by definition, if you create the default workflow, it will automatically flow up in your organization. So just by setting up your organization to say who reports to whom, you actually have set up the default workflow. And then of course you need to, and if you've done that and then also assigned to say who is responsible for which department, for example, that is basically constitutes the full setup of a workflow, more or less, apart from entering the data in the screen that I showed you earlier, saying for which time is the workflow and so forth, right? I mean, very basic data, a name of the workflow and so forth. However, there are a lot of things that you can adjust in this afterwards. You can say, who can approve what, and who should have access, who can change this, and so forth. You have these transitions and data access tabs here. So I mean, there is a lot of things you can tweak on a workflow, but setting up a basic one is a very fast process. I mean, it's so.
Another question is there a bridge between EFP and Power BI?
Yeah, there is a bridge. There is a Power BI option to where you basically where EFP automatically publishes a part of or publishes its database into Azure, and that the Power BI can access that in Azure. Okay, any other questions?
That's it for now. I'll tell you when there are more.
I see there's also a vanilla, I see one which is, or the reports, vanilla preloaded reports, and that's the queues need to create the reports individually. There is a bunch of reports that come with the system that actually get set up automatically when you set up the system. So like basic P&L, balance sheet, cash flow. Of course, the cash flow rule you may need to tweak a little bit, like I showed you earlier, to say what goes into your different cash flow lines. I mean, maybe your cash flow doesn't look exactly the way it does in our kind of the initial setup. But again, I mean, tweaking that is what we looked at earlier, right? So it would be if you go into your cash flow statement here, and you would like to say on your indirect statement here, you would like this line here to say net increase, decrease. Let's say you want that to say net INCR and DECR instead. Sorry, not in my help text, in this one, like this. And then do save. So then you can, so it's really easy to tweak this. You can, let's say you want to reorder them, you just move them around. You can add new members. So let's say you need a new line here, you would just go in here and create a new line in your cash flow statement, or remove a line. So normally it wouldn't take, I mean, it takes, you have to set it up. I wouldn't say that it just takes minutes, right? Because you have to look at it, you have to reconcile it. But in general, it's a fast process, and you have some standard report to start with. And there's also a report wizard to create new reports that are. And then on top of that, you can also have, of course, which I haven't shown today, I haven't focused on that, but there is an Excel add-in as well. So if you would like to do that, you can use the Excel add-in where you have formula-based language as well to be able to retrieve that data.
Another question, John, does Epicor Financial Planner work with all Epicor platforms? One of our attendees today is using Eclipse.
We don't have a direct integration with Eclipse, so we would be happy to talk with you about that. But we don't have a predefined integration with Eclipse that is today, but we can get data from basically any system. So that's also an important thing, because in a lot of our customers, they actually have, I mean, load data from other systems. I was I mean, some people use Epicor only for financials, right? And then they have some other system that they use for sales, for example. And then we can load data from the sales system as well to add into this. Today we focused a lot on financials, by the way. I mean, there's a lot of things you can say on the sub-ledgers as well, because what you can do here is that you can see up here with the processes that's in this demo, which are not won't go through at all, but I mean, here we have the accounts payable, receivable. We'll be focusing on financials today, but we also have sales. We have an assumption model where you can set up assumptions and drivers for your budget. We have commission models if you want to do sales commission things. So there is, and also this list is extendable, so you can actually define completely new processes that you put into EFP as well. And these processes, they can feed into one another. So of course, if you do sales budgeting, maybe on detail level, right? You do that by product and customer in customer currency. And once you've done that sales budget, then you set up a business rule that will feed the financials from the sales budget. So the sales budget populates the correct account in the accounts in the financials budget. And of course, when you look at the input screen that we looked at earlier, if you would have those accounts, they would show us white because they wouldn't be there. And another one is, I mean, you have the HR here, you have fixed assets as well, which is other processes. Okay. So I'll go back to my presentation and conclude this, and we have some time for more questions, I think, as well. So this was a little bit about the Lego pieces, about this way of doing budgeting and the way of supporting decisions, because I think that's again the gist of this is that improving your budgeting process, that's one thing. I mean, but improving your budget process in volatile times, and probably you can learn something from that, or we all can learn something from that when we go into budget processes, even in more stable times. It's a lot about improving your decisions and improving your ability as a finance department to support business decisions and board decisions with the budgeting and forecasting process that you have. So I think that's really the key takeaway for me in this, is that we need to work better with our customers in improving the decision processes and not seeing budgeting as a standalone process, but more as an integrated process in business decision making. So, I mean, there are some steps in doing this. You have to have a process that's flexible enough to handle change, right? I mean, you have to have a standardized process, of course. That's what it's easy to say, but I mean, the key thing when you do a process that's standardized is that it also needs to be able to handle change, because I mean, so that's the hard thing of having a standardized process. The second part is that to focus on business decisions and business drivers, to really figure out, okay, how do I create a system where my business stakeholders can contribute as much as possible? How can I make a system where they can contribute in the budget process as much as possible and as effective as possible? And not only into the budget process and in the financial process, but also thinking the reverse. How can the forecast process contribute into the decision-making process of my business stakeholders as we go along? And that becomes especially interesting in this again in the volatile world, right? Of course, evaluating what you do is always key, right? Both evaluating the process and the model you're working with, and evaluating the data, making sure that you have a high degree of transparency, making sure that your processes are in a way that you can focus on the business issues and not get bogged down in standard issues that you may have. And of course, things like having electronic distribution of reports, where you as where the users themselves could go into the report, like I showed you earlier, and look at, okay, what were the underlying reason why I'm way over budget on this account or way over forecast on this account without calling the finance department and asking what went into this number, so they can investigate that themselves. We'll offload the finance department and contribute to that, and hopefully then contribute to being more agile in supporting the business. And also finding out what is the right frequency, how can you do that, and also being adaptive in that. And that's when it comes to this live forecast that I mentioned earlier, is that maybe you don't need a forecast cycle that is 2 months or 3 months or 4 months. Maybe you need a forecast cycle that's 2 months in March, and then it's 6 months, and then it's 2 months again in August. And so you're not, so the cycle itself is something you decide from cycle to cycle, the cycle time. That's also something that's supported within EFP. So you don't have to decide, you don't have to be rigid. I mean, you can have a standardized process, but still say that, well, we determine that the interval of our forecasts to be different from time to time, depending on the amount of change. And of course, that can also be different by department, right? I mean, it could be that you do a reforecast for 5 departments that are heavily affected by a change that occurs in the world, but the other departments, or your other 45 departments, are not even touched. So they are not a part of that forecast round. Yeah, this is some trends in budgeting. I won't go into this. I mean, you will have the deck afterwards as well if you want to, and the recording. This is actually a quote from one of our customers, CBN, and another quote. So there are some different packages here of EFP. So you have a basic package, you have a standard package, and the complete called the works. And there is a fact sheet that you can request from us or request from Epicor. There is a number of content packs that you can add. So you can add this sales and profitability analysis and advanced financials, and they are developing all the time as well. And there is a possibility to have a trial to work with your system, so you can actually look at this with your own data. That's a little bit of a limited offer, but this is something that you can ask your sales account manager, or if you want to, you can always contact us, and we will work together, of course, with the Epicor sales team to help you out. In general, there are some resources here. So with that, I'm at the end of my presentation, and open up for if there is a remaining Q&A.
I believe we have answered all of the questions. If you still have questions after this webinar, please feel free to email us as well. We'll send you the presentation and the recording. Feel free to reply to that email, and we'll make sure to answer your questions as well. Thank you, Jan.
Thank you very much for attending this session today, and hopefully it's been useful for you. And feel free to contact us. Thank you.
Thank you, everyone. Bye.